Okay, morning everyone. Morning everyone. My name is Ross Armstrong, and I'm a director of Impetus and a shareholder of one of the companies that drive the Blue Jeans events. So on behalf of my co-hosts from Impetus, which are Grant Olivier, he's going to introduce Phil today, and Rajesh Sherry, who will deal with the guest questions. Just a warm welcome to all of you to this webinar, and a special welcome to our keynote speakers, Phil Morantanis from AppPoint and Pete Armitage from Anchor Capital. Just a reminder to everyone regarding what Blue Jeans is about. So it's a response really to resource entrepreneurs with networking, education, collaboration, and creativity in a relaxed environment. At our last Blue Jeans event we held at Durban Country Club, the guests enjoyed some networking and a wonderful breakfast with an engaging discussion on digital transformation from Ryan Hogarth. Well, unfortunately today we can't serve you breakfast, being in lockdown. However, we trust that after listening to our two keynote speakers, you'll be left feeling inspired and be able to relook at the way we do business, at the way we invest, and we as entrepreneurs, how we approach the ever-changing world of technology. So before I introduce Peter, I'd like to give you a quick heads up regarding the questions. After each guest speaker, we're going to allocate 5 minutes or so where Rajesh will handle with all questions that have been submitted on the webinar. And so on to Pete. Peter Armitage, I'm sure many of you have heard of him, been introduced to him, but he's had over 20 years experience in global financial markets. He's worked as an analyst, head of research, and chief investment officer at a number of SA top financial institutions. He founded the Anchor Group in 2011 and has been rated the top investment analyst in the annual Financial Mail rankings, a record 21 times. So well done, Pete. Today, Pete will discuss the investment landscape and how to be invested coming out of COVID-19. Pete, it's wonderful to have you with us. Thank you for your time, and we look forward to hearing what you have to say. Over to you.
Okay, hi folks. It's an honor to be here. I'm not sure exactly who I'm speaking to, but I'll look through the participants list a little bit later. But it's certainly a change in the world. I'm sitting here in my study. I've taken out all the DVDs and Barney DVDs out of the back of my study, so it looks more professional. But sitting here currently talking to over 100 people, so it's amazing for the opportunity. I'm just going to bring up a presentation here, which is always the point of maximum anxiety for a presenter. Kind of get the technology working. So I think that should be on your screen now. Right. So I'm going to talk through the South African scenario. I think all of us have been looking at COVID stats and projections and all that kind of thing ad infinitum across the internet. I certainly got hooked on Worldometer right in the early stages. But ultimately the daily information becomes a bit too much. What's interesting from a stock market point of view is you've had a lot of South African companies present results, perspectives, impacts on what they're doing about it. And I think that can be very instructive for all of us to try and understand what's happening out there, what other people are experiencing. 2 or 3 weeks ago, I had a session. We had a bit of a drink on Zoom. For those of you who want to be cool, you can call it a Zati. That's a Zoom party. But it really struck me out. Some of my mates felt alone and they didn't really know what was happening out there and what other people were experiencing. So this hopefully will help a lot of you. And then we obviously come from the investment world. I started and ran a business called Anchor Capital. We invest about 65 billion rand of client money here and offshore. And we're going to run through certain things from an investment point of view, but I'll try and keep it as casual as possible. So what we're saying out there is we've really become balance sheet detectives. And we're sitting at a time where our overriding perspective right through all cycles is to buy great businesses at good prices, as opposed to bad businesses at deep discounts. We like to be in businesses that are growing. But in the world at the moment, accounting profits have really taken a back seat, and people are focusing on cash. So an example is retail stores that are sitting out there. They've lost 6 weeks in terms of selling their summer goods, so they're going to have to mark those down dramatically. But they're willing to do so in order to realize cash, as opposed to trying to protect their margins. And probably the key message that I want to get through today is a quote that you'll see a bit later from Brian Joffe, is prepare for the worst, but hope for the best. We really don't know where this thing is heading. And if there's actions to be taken, take them now, move quickly. Things that you've been wondering, kind of are they relevant in the business, or do you want to pursue or staff your passengers? It really is a time to look after yourself and your business and look after your good people and focus on that. To give you a feel for what's happening out there in SA, if you strip Naspers out of the South African market, you have to do so. That's basically a Chinese business. We think South African company profits will be down well more than 50% this year, and it could well take until 2022 to return to 2019 levels. SA companies have stopped paying dividends effectively. I think South African dividends in the market will be down more than 70% in 2020. And even the dividend bellwethers and companies that have got a lot of cash and are still generating cash, like Pick n Pay and Clicks, are not paying dividends. And Richemont, which has got a proud history of paying dividends over many years, and they've got 50 billion rand of cash in their balance sheet, they halved their dividend. From an investment point of view, hence you can't get a yield or income out of shares. Property companies are not paying dividends by and large. So from an investment point of view, the bond market is really the only place to get yield. Predictions across SA businesses is that it'll take 12 to 36 months to reach normality. And really very different experiences across different sectors, and we'll go through that. But I think what's key is that clients are striving for more variable cost basis at a time when turnover has taken an absolute plunge. We're seeing a lot of companies talk about trying to make their costs more variable. And there have been underlying consumer trends that have been in place for many, many years. And we see those being accelerated. And the two key ones being the search for price and value and embracing e-commerce. And certainly in my household and with my circle of friends, their willingness to transact on the internet has changed dramatically over the course of the last 2 months. And just to make the point that this crisis will pass, like all others have, but we'll be sitting with a world with more debt. And really it's a case of, we've had some terrible months. There's going to be some very bad months to follow, but it's how you emerge from this crisis. So in this presentation, I've got a lot of slides and a lot of facts. I'm not going to attempt to go through them all, but you're welcome to have the presentation. I'll send it to the guys hosting it. And if you want to, you can go through that, a lot of the data where it's applicable to yourself. First of all, from a world market perspective, the world market isn't that bad relative to what's happening out there. So we're back to kind of November levels. So on a 6-month basis, you haven't lost money. The market went up quite sharply towards the end of last year, then plunged 35% and has bounced back about 20%. So that leaves it down 14%. It's a very unpleasant experience, but in the context of what's happening out there, the market could well have been down significantly more. From an investment point of view, that's the index. The tech shares and the Chinese shares have done pretty well. They're businesses that have held up. So while that's down 10 to 15%, the S&P, for example, is down 8% in America for the year. There are lots of shares that are still down significantly, so there are investment opportunities. The PE multiple, which is the price that you pay for $1 or rand of earnings, you can see on the right-hand side is pretty much the highest it's been in 18 years. So we're actually still fairly nervous about the markets. The market's reacting quite positively to a resolution of what's happening. I think the vaccine is, every time there's a new story about a possible new vaccine coming through, the market bounces. So the market is sitting in a hopeful place, but we're still acting with a fair amount of caution. Here's a very busy slide just showing in the first quarter in America. If you look at the first column, that's the earnings growth to the end of March. So you look at the bottom, that's minus 14%. So the average company in America's earnings are down 14%, and you can see very different within different sectors. So consumer discretionary, where consumers have been locked up, the earnings are down 53%, financials down 43%. Information technology is up. So some of the trends that have been happening have in fact benefited companies out there. Then if we look at American earnings, so that line, that dotted line is where we are at the moment. And this is consensus. So all the analysts around the world putting in their expectations for companies' numbers. You can see a sharp drop to about minus 50% down. But the reason that the market is performing reasonably well in the context of what's happening, as you can see going through into 2021, the world is forecasting a big bounce back. And the risk, of course, is that it takes longer than that to happen. Just to give you a feel for things that have done well. So this is our Global Technology Fund. It starts at the beginning of the year. And you can see it's actually up quite considerably this year. The factors are obviously one, the rand. So these are dollar investments, but there always are places in the world that are safe places to invest. And this is our Global Equity Fund. Again, this is measured in rands. So, sorry, this is measured in dollars. The other one is measured in rands, but you can see it's recovered and is above where it was at the peak. First of all, a point to make is that the SA job scenario is extremely difficult. If you're a 23-year-old graduate, you're not going to get a job this year. If you've got a poor or no matric, there's no job. If you're over 50 and retrenched, there's no job. And perhaps the data that's most reliable in America, there were 6 million unemployed people at the beginning of the year. Interestingly, that's the same number at the beginning of the year as South Africa, and their population is 5 times as big. But that's gone from 6 to 35 million people unemployed. So the 150 employable people in America, 35 million are unemployed. A lot of people think a big portion of that is temporary. So restaurants and the like have put people on furlough, but they will hire them back. But the estimates are that 20% of the new unemployed are permanent. So this will change. We're going to hit the bottom of a cycle. It always feels like a period of despair, but that is the reality for now. Some of the most compelling quotes I've seen come through company results recently, as I said earlier. So Brian Joffe, for those of you who don't know who he is, he's probably South Africa's most respected entrepreneur from a corporate perspective. He started Bidvest. When he retired from Bidvest, he started Long for Life, which owns Sportsman's Warehouse, Outdoor Warehouse, and Sorbet, among others. So, a guy with a lot of insight and making the statement, prepare for the worst and hope for the best. Then the Microsoft CEO saying the COVID-19 pandemic has driven 2 years worth of digital transformation in 2 months. And that's why a lot of these tech companies have done pretty well. Johan Rupert from Richemont coming through and making the point that a strong balance sheet puts you in charge of your own destiny. It's too late to do anything about your balance sheet that you went into with COVID. But I think he's always been criticized for having too much cash on the Richemont balance sheet. But he's saying, this now is an indication of why that makes a lot of sense. The CEO of the world's #1 pork producer, Smithfields, I think expressing what a lot of CEOs are feeling. During this pandemic, our entire industry is faced with an impossible choice. Continue to operate or sustain our nation's food supply, or shutter in an attempt to entirely insulate our employees from risk. And then Brian Joffe again, quite a jarring statement. I've experienced many challenging events during my 50-year working career, but nothing comes close to the experiences of the first few months of 2020, following the outbreak of the pandemic. This extraordinary time will shape a new future. It will forever be known as the period in which we changed paradigms, changed ways of working, and changed the way we relate and interact with each other. And then Shamil Jusub from Vodacom indicating that their data increased 110% year on year in April. And yesterday we had a webinar with Michael Jordan. He was saying Rain's data, the demand is up 400%. So where are we now? It's pretty tough times out there. The estimates of South African GDP going down between 6 and 18%, and then bouncing back only 5 to 7% next year. So it probably takes until 2022 before we get back to where we were. A lot of companies have gone into business rescue or liquidation for obvious reasons. SAA, Comair, Edcon, Pumelela, magazines have been closing down. I don't think we're going to have a newspaper and magazine industry in this country over the course of the next 2 or 3 years. And really a focus on cash flow and survival, cutting costs, slashing capex, retrenchments, and there isn't a job for new entrants. But having said that, for people who still have their job and are earning the same salary, expenses have been alleviated. So prime has come down by 2.25% this year, And we're expecting an announcement of another 50 basis points to 75 basis points this afternoon, which would take it down 3% and make money 35% cheaper. Fuel is 30% cheaper, and we could well have some deflation in the short term, where retailers and the like are discounting goods to realize cash. Quite scary from a personal wealth and NAV perspective. We think house prices in South Africa could be flat for 10 years. They certainly have been for the last 5 years and probably will be for the next 5 years, which poses the question, who would build a new house? It follows that property rates should come down, but that probably won't happen. So I'm going to flick through a few slides because I'm trying to get through this in kind of half an hour. This is Vodacom, their data traffic. You can see a huge underlying trend from the beginning of 2019 to today. And then the maths of low and no revenue. I think the point is, depending on what kind of operating margin you run on, there's some companies, if turnover goes down 20%, they start making a loss. In this particular example, in base to 100, I've taken a company which is making a 16% operating margin. And if turnover is down 50%, you start making a loss. So this is what companies are experiencing out there. And even a company like Pick n Pay, which can't sell 20% of its products, which are the higher margin products, we think for April probably made a loss. So there's really 4 categories of companies out there, and this is why we look at it from an investment point of view. But I would imagine many of you are entrepreneurs and are faced with your own businesses, and you can see where you sit. So number 1, companies that are positively or neutrally impacted, and those are kind of safe investments: Naspers, Tobacco, Aspen, Asset Management, Vodacom. Secondly, where we think there's some opportunities in the stock market, and where hopefully some of you sit, you have temporarily lower profits or small losses, but emerge in good shape. So there it's like the MTNs, Bidvest, Bidcorps, Clicks, banks, food retailers. And then there's companies that will come through this period with lower profits or losses, but they'll emerge from it with a lot more debt and a much more difficult way forward. And then lastly, companies who won't survive or they need a rights issue. So things like Comet, Sun International, cement companies, Sasol. An interesting chart from a market point of view to see the way the market looks at it. So Zoom, which we're all using now, has now got a market value of $50 billion in the stock market. To put that in context, that's more than the top 7 airlines in the world put together. Zoom had 10 million users a day in December 2019, and their business has changed dramatically. They're now sitting with 300 daily users on their product. Some interesting stories from across SA. It was interesting to hear the CEO of Pick n Pay talk about how before the lockdown, Sanson housewives were stocking up with bully beef and tinned meatballs in the belief that to be locked down forever, they'd be prepared to eat that as opposed to the Norwegian salmon. Then different segments of the market have had very different experiences. So we've got a cattle farmer client who sells cattle where the meat goes into the lower end of the market, and he used to view it as quasi-cash. He'd take cattle to the market and they'd be sold for, sold immediately, but now he can't sell them. So a boost for chicken and pilchards and the like. At the same time, we've got a client spa owner who operates at the high end of the market. His butchery sales are up 80%. And we've got a client high-end seafood retailer who sells up 300%. Because obviously people can't dine out, so they're spending more money on stuff to cook at home. Twitter's announced that their staff can work at home indefinitely going forward. So there's definitely an impact coming through in office space. And price and value is key. And my advice, if any of you have got businesses, if anything, lower your prices. People are looking for value, and if you can provide a value-added service at a good price, that's really where we're looking at. And branded consumer goods, so something like All Gold tomato sauce. The customer's going, do I need to pay the premium for the brand, or is the Pick n Pay tomato sauce fine? And then company internet presence is becoming a key factor. These are global sectoral views. It'll take a long time to go through this. I'll just kind of leave that on the slide if anybody wants to consume that in a PDF version. So going through the different segments of the market, we've broken it down into suppliers, landlords, retailers, and customers. So the chart on the right says Sun International share price. So guys who are really at the bleeding edge of what's happening out there. So the Sun International share price peaked at about 150 Rand. It's now sitting at 15 Rand. So it's down 90%. And this is the reason I put this there is this is obviously a company that all of us would have used their services at a point in time. They're sitting with a 2 billion rand market capitalization or value and 13 billion rand of debt. So an historic 2.5 PE, which is really history. And they're obviously now making massive losses. So Vodacom, their data traffic's up 110%. The hospitals are an interesting one. They're currently running at about 40% occupancy. And if we go back to that chart I showed at the beginning, it certainly means that they're incurring losses. Netcare and Life and Mediclinic have all suspended non-essential elective surgery, which is often where they make their margins. So as an example, in Gauteng at the moment, there's 58 COVID patients in 107 hospitals. So they've emptied out their hospitals in expectation of a COVID flood. But currently they're sitting with half a person per hospital. Distel profits down 65%. Some of the mines are running at 50% capacity. And the mines have been moaning and bitching about going back to work. But as soon as there are COVID cases, they're forced to react. So for example, the Marula Platinum mine in the life of Impala, they've had to close it down after having 19 COVID cases. So 6% of production gone. Richemont is surviving, but Johan Rupert makes the point that it's a travel-related business. People tend to spend money on luxury goods when they're traveling, and he thinks it'll take 12 to 36 months before normality. So tourism and hospitality is a disaster. Airlines are a very difficult space. If you picture and remember what happened after 9/11 and the way our travel experience changed, you can picture what's going to happen going forward. In fact, I was reading an article the other day from the CEO of Dubai Airport saying that international travel will be more painful than open heart surgery going forward. If 400 people getting on a plane all have to queue 2 meters apart, that'll take the queue out of the back door of the airport. So, it really is something that's going to change our lives. Debt-laden companies in the hand of the banks. For those of you who are facing troubles, there's, the banks have got that 200 billion rand secured pipeline. The banks are all getting together and negotiating with companies. If you're in good standing before COVID, they want to support you. We've heard stories of how they're dealing with property companies where they effectively are waiving interest and capital, which will be deferred to the end, and just kind of sweeping rent that comes in. So alleviating the pressure on companies, but obviously they will come out of it with more debt at the end. Altron is just one company example showing what people are doing. So what struck me here, they've actually reversed their 2020 salary increases, freezing salaries, freezing headcount, cutting capex, postponing any project that absorbs cash. An interesting picture of Astral while you're sitting there eating your chicken at your dining room table. This is how it's getting made. And you can see how they're enforcing social distancing right across their business. Interestingly, even in the boardroom, where they put squares forcing people to sit far away from each other. This is Richemont, and what I've circled there, they're now selling 19% of their luxury goods. So your Chanel products, your Mont Blanc watch, pen, etc. I never would have thought 5 years ago that people would be willing to transact with that electronically without seeing the physical good. So that's what's happening right across industry. Talking about landlords, I'm not sure for those of you who property holders, there's a lot of data in here showing the rent collections. If you look at the bottom right-hand corner, Growth Point, which is considered the South African property bellwether, they've collected 71% of April rent, 70% of May rent. That obviously applies to the month before. Now, property companies need to collect between 55 and 70% of rent to break even, depending on their level of gearing. And there's really a complete paradigm shift in the property market. Companies are looking for more variable rents. There'll be less space required. So it's really about, and my advice for those of you in the property space, if you can sign some leases at lower levels, just go ahead and do it. No dividends coming through from property companies. They're all trying to prop up their balance sheets. Some examples are in Namibia, malls open on the 4th of May. So everything is reopened and in fact trading quite well, but sit-down restaurants not allowed. A similar situation in Poland and Romania, where South African markets get quite a lot of exposure. The retailers, Spur is a taste for life in 155 out of 559 restaurants. A lot of guys doing the calculations to see if the turnover from takeaways is going to be enough to get them to break even. And if the estimate is no, then they're effectively not opening. So the sector's been in turmoil. My estimate of where sales will be in 6 months' time relative to December, January will be about 10% down. So Dis-Chem came out with an interesting presentation yesterday, where in March their sales are up 45%, obviously with all of the stockpiling. In April, their sales were down 40 to 45%, depending on what part of April. And then in May, where things have normalized and they can sell all of their product, their sales are down about 6%. So there's a lot of essential goods there. So I think across the retail universe, companies' sales when things normalize will be down between 5 and 15%, depending on what you sell. In April, South Africa sold a mighty 574 new vehicles. It compares with an average of 35 to 40,000. And obviously those businesses are under quite some pressure. So Sportsman's Warehouse at the moment in level 4, they can sell 50% of their products. And interestingly, they're saying for those products that they can sell, they're actually up on last year. So there is some hope as things kick through. A company like Foschini in big trouble. Last year, their profit was 3.6 billion rand. And they're losing about 1.5 billion rand per month in gross profit. So that's at the height of the crisis. That's kind of in the April complete lockdown. It's got a lot better now. But these sorts of companies with debtors books as well have very smart management to work their way through these scenarios. I think Foschini's got particularly good management, and the retail sector has, but these are the kind of top line issues that they face. Pick n Pay indicated that at the moment they still can't sell 20% of their product at higher margin, and that flows through quite quickly into losses. Spar indicated that without a new Polish acquisition that they've made, the SA business is up 8%. And there we're seeing Spar is dominated by franchisees, and entrepreneurial businesses are tending to do a lot better than corporate businesses. And in fact, Pick n Pay referred to that as well, where the guys are, getting in the store, changing their configuration, marketing, changing their prices. So if you're entrepreneurial and on top of your game, you can certainly outperform the corporates. And this is the Dis-Chem slide I was talking about. I'm not going to go through that. And just some quite interesting, fun stuff. So Pick n Pay showed the stockpiling at the end of March, what people bought. It's bizarre to find that bleach was number 3. So perhaps people were believing Donald Trump indicating that you could drink bleach and that would sort you out. Vodka, unsurprisingly, at number 4. And toilet paper up 82% at number 7, which I've never really been able to fathom. When are people shopping? I think the consumer all has a collective mindset which operates in a similar fashion. So you can see on the left-hand side, the biggest increase in shopping is on Tuesdays. So that's obviously people thinking that, nobody will shop on a Tuesday, and then everybody does. And then the converse of that is much lower shopping on the weekend. On the right-hand side, less visits to the store, but more spend per visit. Then this is during lockdown, 300 increase in paint and brushes. And all of the other ones tend to be dominated by things that help people cook at home. And then demand for grocery home deliveries increased by 200% and 1,000% growth in first-time customers. So this is a strong indication of new people coming into the market who are willing to transact digitally, whereas perhaps previously they weren't going to get out of their old habits. Then how has the customer reacted? This is US e-commerce penetration of retail sales. And you can see a very solid trend going back from 2009 and over 10 years growing at 1 or 2% a year, and in fact accelerating towards the end. Then in an 8-week period, the US e-commerce penetration went from 16% to 27%. The 27% of all sales are happening online in America, which is absolutely astounding. At the bottom left-hand side, China is the furthest through the whole COVID outbreak. And April, which is kind of close to a normalized month, their sales are down 8% year on year. Remember, I indicated my expectation of South African sales being down about 10%. So that gives you some guidance there. So that's really the nub of the presentation. To sum it up, in our investment world, we've become balance sheet detectives. In my early days as an analyst, we just used to look at income statements and how much people had grown their profits year on year. But now the first thing we do is look at the balance sheet and try to analyze whether companies can survive. So for those of you having tough times, There's a lot of businesses that have got zero turnover at the moment, and that is starting to change a little bit. You're not alone. There's a lot of companies really battling. Take your medicine now and do what you can to survive. Things will get better. And I think from a human point of view, a quote I heard the other day was saying, if you're betting against the stock market, you're betting against human ingenuity. And for the first time in decades, you've got the entire world working towards solving one problem. So, I think there's a fairly good chance of a vaccine. Johan Rupert in his Richemont presentation was talking a lot about a vaccine, because ultimately, if people start to feel that they can get vaccinated against it, then the fear stops. Because really a lot of what's driving consumer behavior is fear. Different experience across different sectors, and the underlying consumer trends will accelerate. And just to assure you that this will pass, and it can feel pretty miserable. But there are also opportunities that we can go and garner along the lines of what I've talked about in this presentation. So I've kept that to my kind of 25 to 30 minutes. And Ross, I'm very happy to have any questions. Guys, there is, for those of you who haven't used it, at the bottom there's a Q&A button. You can sit there and type in a question, which we can either answer face to face, or I'm very happy to give answers in text there.
Cool. Peter, thank you so much for that insightful look into the markets. I'm going to ask you possibly to maybe stare into a little bit of a crystal ball and your opinion on the Reserve Bank's interest rate announcement today. Do you think it's going to cut, and roughly what would the impact be?
Yeah, so prime is currently 7.75%. So the repo rate, which is what they decide on, is sitting at 4.25%. And then the banks add on 3.5 to give you a prime rate of about 7.75. So that's the bank's margin. Effectively, that's what they make their money out of. And for many of you, you've got loans from the banks. Everything is set around prime plus, or prime minus, depending on the type of security that you're giving and the cash flows you've got in your business. So they've got already, that 4.25% was 6.5% if you go back to January. We're expecting them to drop by another 50 basis points, which would take prime to 7.25%, which is, I think, the cheapest cost of money in about 10 or 15 years. So, that does provide some alleviation for people who've got debt and they've got variable interest rates. It would be very tough for them to cut a hell of a lot more than that. So I think if they did, the expectations are somewhere between 50 and 75 basis points. And, like I say, that decreases your cost of money from the beginning of the year to now to by about 35%. So it's quite meaningful. In the last Reserve Bank meeting, there's 5 guys who vote for where interest rates go, and all 5 voted for a cut at the last meeting. So they're certainly at the last point where they were making this decision. There were no naysayers. Everybody agreed that in order to take some pressure off the economy, then they needed to change their stance of the last year or two, where they've been quite stubborn in terms of interest rates. So that would seem to suggest there will be a cut. I think a 25 basis point cut would be a surprise negatively. 75 would be a surprise positively. But our expectation is for 50 basis points.
Okay, fantastic. Thanks, Peter. And then the Rand dollar exchange rate, do you think it's going to stabilize at about 18, 19 Rand?
No, we think our expectation is the Rand dollar exchange rate coming back to about 15. We've had a spike in the Rand dollar exchange rate, which tends to happen on average 1.5 times every 10 years. In every single instance in history, it's come back quite sharply. Our fair value for the currency, if you use purchasing power parity going back to 2000, is about 14. But we do think South Africa deserves some emerging market kind of company-specific risk. The important thing to understand that in the short term, and the sharp moves in the currency are much more to do with global markets and emerging markets than South Africa itself. So, we're in the same basket as Turkey and Russia and Brazil and the like, and the currencies all tend to move together. So all of those emerging market currencies took a pasting this year. a lot of them have, yeah. So if the world goes risk on, in other words, comfortable that will emerge from this, in developed markets move first. You've seen that in the US stock market. Emerging markets follow, and emerging market currencies follow. So we still think the rand will weaken by 5% a year on average over any 10-year period. But if the world doesn't become Armageddon, we don't get a huge big resurgence, and things get worse again before they get better, then you are likely to see the currency strengthening quite materially.
Awesome. Pete, thanks so much. I'm going to hand over to Grant, and if there's any questions, if you could answer in the Q&A, I'll try and answer.
Absolutely.
But
Cool.
Appreciate it. Thank you so much.
Cheers.
Peter. Cheers.
Well, thanks guys. Thank you, Rajesh. Yeah, to everyone, my name is Grant Olivier. I'm one of the directors of Impetus and a shareholder in the founding business, Blue Jeans. Our role this morning is to introduce Impetus, and secondly, to introduce Phil Moratanis, our second presenter. Just to chat about Impetus very briefly, Impetus is a company that distributes innovative solutions. As an innovative company, we believe that working in the new normal requires businesses to either pivot or start reinventing themselves to survive what we're facing right now. These changes may be as small as addressing inefficiencies in your organization, or as vast as having to change your product line or your service offering. At Impetus, we also believe the requirement to continually assess and innovate your business is actually the new norm now. We only have to go back a decade or two, and if I mention two large organizations like Blockbusters and Kodak, you can see they actually felt that they could survive the digital era without any innovation or change. And look where that got them. So yeah, our feeling right now is we've got to all, as I think Pete touched on it, is you see the difference in the entrepreneurial spa stores versus corporate, and how an entrepreneur can pivot their business really quickly and be a lot more innovative. I think we really need to look at embracing that going forward. And one way of doing that is really around bringing technology into your organization. And this morning, Impetus is really proud to introduce a product that we distribute, which is known as Opus. Opus is a platform which is changing the way businesses operate. And I'm very proud, in addition, to introduce Phil Moratanis. Phil is someone that I've worked closely with for many years, and we've become friends throughout this process, and it's really an honor to introduce Phil in this segment. So Phil is a digital entrepreneur who founded and developed a software platform known as Spotlight. Spotlight was the leading financial advisory and wealth management platform, which was used by about 94% of the South African market before it expanded globally. And Phil grew that business to a 350 strong employee base. And the business was later sold to Iris, which is a technology company listed on the Australian stock market. The corporate life wasn't for Phil, and after a few years in corporate, he wanted to get back to his entrepreneurial roots. So 6 years ago, Phil co-founded a business known as AppPoint and started developing new technology, bringing in skill that he had worked with previously, some really top innovative developers. And they wanted to solve the current pain points in a modern business. And they started talking to friends in business and colleagues that they had met along the way, and saw a gap in the market and started to build the Opus platform. So I'm proud to hand over to Phil to educate us on the Opus platform and how it can be used in our businesses in various areas, including dealing with the current COVID crisis. So Phil, if I can hand over to you.
Thanks, Grant. Thanks for that intro. I'm just going to share my screen and go straight into it. Hopefully you can all see the screen at the moment. I just want to double check that that is on and that that is being shared. So let's just make sure that that's on. Cool. So thanks, Grant. It's been a great pleasure. I think, as you said, we've worked together for a good few number of years, and it's been a wonderful experience. And it's now really nice to be a participant in this panel and be part of the Blue Jeans environment. Obviously, I think Pete's talk was very, very central to what we leading on to in terms of the tech space. And our focus is going to be on how do we make technology work for you in your business. So how do we make your business safe? How do we create an agile environment and a responsive environment? Because I think those are the key points that we're going to need to have in a business in order to be able to go forward in this new kind of era. So with that, I'm just going to go on to the next slide, and that happens to be a very similar slide to what you've just seen with Pete. So I won't go into the rest of the detail that I had, but I think what's quite impressive is that it took 10 years to go from 5.6 to 16%, and then in just 8 weeks went from 16 to 27%. And this has been the virtual commerce space. So I think the question for me was more to the point is this consumer inertia going to continue? Is it going to continue in this vein? And I think it is. I think that what we're seeing at the moment is that a lot of people have shifted from what they traditionally were doing, which was shopping in a store, to now being comfortable with shopping online. So those barriers for the 50-year-old age group and upwards, where they were saying that they didn't want to purchase online or go into e-commerce for all sorts of different reasons. The safety element is now kind of discounted that, and it's those folk are in there, and they're not going to come back from it. So I think that inertia is there, and I think the inertia is going to continue. So a lot of the businesses that have taken on e-commerce, that have been able to adapt and be agile to it, have really done well in this space. So I think in terms of where the market is and what the market's done, Pete covered that really well. What I want to do this morning is really focus on what are the operational norms? What are we dealing with in terms of the operations in our business? Because that really talks to what our application is about, and really talking around remote workforce, for example, and what the impact is of remote workforce. So as social distancing has become critical to helping slow the spread of virus, more and more companies have shifted employees to remote working. And for new remote working norms to be successful, leaders and owners have adapted the management strategies to foster this collaboration and productivity. They're also focusing on forming teams that can function remotely and develop workflows that can successfully execute away from the office. And that's quite tough from where we've come from. Meetings have been adapted to virtual gatherings, and company leaders and managers will need to ensure employees have the tools to support that transition to working remotely. How do you know what is being done in the way that you're accustomed to as a business owner, as a leader? How do you know that your customers are getting what they expect to be done? So these are challenges that we're all facing now. So I think we've seen a massive increase in use of messaging platforms, but is messaging the right platform? And I'll talk to that a little bit in the next few slides. How do we make sure that procedures are being followed in our businesses? And how do we empower our employees to work remotely? It's not just about messaging or putting Zoom platforms into play. It's more about creating an environment where they can work successfully and be able to work in a way that's expected by the company, and that you as a leader are able to deliver the right service to customers. So that from an operational point of view is very, very close to us, and very important in what we believe is the new norm. The other one is the ability to be agile and efficient. The world's literally changing by the minute. We've seen a number of businesses suffer during this time, and Pete spoke to that in a lot of detail. And then some businesses really being very agile and being able to adapt to these changing circumstances. Now, there's some great examples that we've seen, some of which we've touched on already, but restaurants entering grocery markets, for example, coffee shops pivoting to curbside pickups. Who would have thought that we would have picked up our coffee on the side of the road? But we're all doing it, and those coffee shops that have adapted quickly to be able to offer a service like that are thriving. Stores that have expanded their digital offerings are thriving. Fitness companies have turned to offering their workouts online, and those are doing really, really well. Companies who haven't pivoted to that aren't. Commercial airlines have now started to offer cargo flights to adapt. In the US, there are hotels that are offering day rates for workers working from home. So for remote workers who want to get away from the home environment, get away from the family and spouses perhaps, and have a space to work in where they can just dedicate some quiet time if they don't have the space in family. So hotels have had to adjust. In the US, GM self-driving cars have now turned to making food deliveries. There's a drone company in the UK that's now delivering food and has taken off. And they've been struggling to get penetration during this crisis. They've taken off tremendously. So agility and efficiency is key and crucial in this particular space. And I'll talk a little bit more around the efficiencies in a short while. Obviously, from employee safety, it's really critical. We want our businesses to be able to remain open. We want to ensure that we've got the right hygiene. We want to make sure that people coming into our environment understand what our environment's about. We want to make sure that our customers understand what our operational norms have been, how we've changed them to create that safe environment so that we can deploy our goods into our consumers with the knowledge that we've done everything that we could. By placing the right things in place or putting the right procedures in place. So it's about preparing the workplace, employee training, PPE, and tools to work safely, employee returning to work and the declarations that are required, as well as visitors' declarations, and ensuring that you know who's entering, and that the folk you don't want to enter who have maybe some kind of symptomatic issue don't come into your office. So those are some of the operational kind of norms, and it's not covering every single operational aspect that we're facing, but those are the kind of the key pointers that we feel we're coming across at the moment, and we've seen a lot of the companies that we're working with really grappling with and trying to during this time adapt and change. So how do you address this, and what do we do? And the companies that we've often come across who aren't using Opus have got a myriad of technologies, and a piece of technology which we're all accustomed to is paper. So when we go out to customers, we use paper. We sign documents, we get installation sheets, we get job cards. It's paper and paper and paper. Then you have messaging, WhatsApp, Meets, and there's loads and loads of different applications that we can talk to. WhatsApp being the biggest market, or the biggest use product in the South African market. And then there's systems, which typically a spreadsheet, an accounting system, or the likes that are used. Now the challenge is that all of these disparate technologies, paper, messaging, and systems, are completely disconnected. So if I gather information on a piece of paper and I now need to transform it into an electronic system, I have to recapture that. So I have to have somebody else recapture it. Now in the COVID environment, that becomes a huge problem because I'm now sharing a piece of paper. So there's a safety issue. Not only is it inefficient, but there's a safety concern. So paper is probably the worst possible kind of technology that we could be using, it from an efficiency perspective and from a safety perspective. From a messaging perspective, it's great, and I'm a big fan of messaging, and I'm certainly not poo-pooing the technology. There's definitely a place for it. The problem I think that a lot of businesses have is that messaging is very unstructured. So it means that I communicate with my staff on work that they're doing. I have a WhatsApp group. We're dealing with a company that we're busy replacing their WhatsApp messaging. They have 250 WhatsApp groups going at any point in time. Now it's almost unmanageable, because how do you search for something that happened a year ago or a few weeks ago? A customer has a query. How do you go back to that particular message in that group on the individual that dealt with it at that time, it's an absolute impossibility to try and find and navigate through that. Often the companies you're working with are collecting information. So, and that information is not just on a text basis, it's on a graphical. So we want photos. So it's loaded with lots of text, loaded with lots of photos. And it's a total hack to try and get it into a system when you want to create a customer report, or when you want to create some kind of history of what's transpired that you can go to and quickly navigate to. The other problem is that with all of this is messaging paper, we want to bring it back into a system. So typically what will happen is that the WhatsApp information, the messaging or paper information has to be recaptured. So it has to be recaptured in order to go through to your accounting system, to your spreadsheet, to be analyzed. So all of that is totally inefficient. Plus it means a lot more engagement with people, and a lot more engagement with staff, between customers and staff, paper being shared. So I think all of these create enormous problems now. And I think we've been in this business for 6 years now, developing the systems, working with different companies. And we've seen an enormous uplift in inquiries coming through right now, because I think everyone's looking for efficiency. Everyone's looking to try and be as safe as possible. We're all looking to gather information once and pass that information right the way through to the end result without having to touch it a whole lot of times, or to have individuals working in place that have to go and retype that information. So this is really what Opus is all about. It's a single piece of technology, and what it does is enables you to track what's going on in your business, to collect information, analyze and present. So it's a relatively, or it's a simple technology in terms of what you deploy in your workplace, and it does 3 things: tracking, collecting, and analyzing, presenting the data. But it's a single piece of technology, and we often find that we replace up to 8, 9, 10 systems in different companies in one application or one solution. And those systems could be paper, as we gave an example, WhatsApp, spreadsheet, accounting package. That's 4 systems already that we have just looked at in a very simple example. So that's what Opus does. And I'd like to actually show you some examples of it, because I think it then talks to the actual mechanisms of how it can be deployed. So first of all, it's a framework. And what that means is that let me just go back a little bit. I do apologize for that. So it's a framework, and that framework means that it can be adapted to every single business. We haven't deployed a piece of technology which is specific to a particular sector in a market or a particular business. We have a framework, and every business's unique workflows, standard operating procedures is put into that framework. That framework is then unique to your business. What that does is it means that your key critical operational IP sits with you. It doesn't sit with us as a piece of technology. That's owned by you, and that's reflected in what is your business and what makes your business successful. The other important factor is that it's self-service. So you can do it, you can implement it in your business. We have a team which together with the Impetus team will come in and work with you as a consulting business, assist in setting it up, assist in putting it into your business, making it work within your business. But our ideal result is if you take that on and do it yourself, and are able to, as your business needs to change, adapt it, add on, and put in the necessary changes that are required. You don't need us for that. This technology is enabled in such a way that the platform is completely self-service. And I think that's very, very critical if we talk to agility and we talk to the importance of having efficiency in the business. You don't want to be talking back to the developer all the time and saying, can I do this? And could you enhance that? Because that creates dollars. In this way, it's inexpensive and you can deploy it with little expense. So 4 pillars in the application. The first is track. We have a concept of jobs. Jobs go out to people. Those jobs could be started on an ad hoc basis. They can be scheduled, or they could be done by somebody or an external system and at that point in time. So I want someone to do something. That's a job or a task. And that's really how Opus would start something. And what's quite critical is that I can manage the tasks. So as a business owner, I can see the status of those tasks. I can see exactly where that person is, what they've done, how much they've gathered. I can launch workflows with them. So I'm able to, from a particular set of questions. So if you do this, I need accounts to be aware of it. If I have a problem or I've reported a fault, workshop need to be made aware of it so that they can send out a fitter and a technician. And I can see exactly where each and every one of those elements are in my business. I don't have to be in the office as an owner or a manager. I can see exactly what's going on in the business without having to be there. My management team, my supervisory team can also drive everything from the platform, see exactly what the installation staff are doing, what the remote staff are doing, or what staff are doing as they're working through. If it's at home, they don't have to be remote. Quite importantly is those jobs and tasks operate on either the web or they can operate on mobile. So our first go-to point with jobs tasks is typically on mobile. And we have a lot of examples of companies from merchandisers, promoters, installers, fitters, technicians, all working in the system, factory staff working in the system, and they would use a mobile. They're not at their desk, they're not sitting in an office, they're out in factory, they're out in the field doing work. So they need a mobile piece of technology that's accessible to them at any point in time. So that's on the job side. Then we've got the ability to collect information. And this is where the system really becomes powerful. We've got all sorts of ways that we can collect information. So for example, we can collect data by reading a license disc. From that, we can tell what the license plate is. We can manufacture, we can pick up the color, the engine number, license disc expiry. So we use that piece of technology by reading that once, instead of having to type in a registration number. We can scan barcodes, we can ask for information, we can pin locations, we can have date and timestamps. So there's loads and loads. There's about 80 different types of information or pieces of data that we can set up. And whenever you set up a form, you can create and say, I'd like that to appear, and I want it to be a number form, or I want a calculation to be done. So the mobile web collection platform becomes incredibly powerful. Then the ability to be able to sign off, and we have a concept where we have interactive agreements, where you can produce agreements, you can put out policies and procedures to staff, and they can then sign those policies, procedures on their own device, go through them in their own time. We worked with the Youth Employment Service on a great project where we built a contract, an employment contract with them, which was completely audio and with a nice graphical based approach. And it was incredible because it turned the contract from a paper, very flat structure, into now this very interactive agreement. And then with all this data, what you want to be able to do is to analyze the data. So you want to be able to put it into an analytics portal, and business intelligence solutions are typically quite expensive. So what we did is we developed our own business intelligence product inside the solution, which meant that we could deploy it as part of the solution without extra cost. And it's meant that we're now able to analyze all this information coming out. So we can put dashboards and incredible metrics on the system while you're gathering this information, that you can see exactly what's happening and what are the hot buttons in your business in terms of what's taking place. So I think with that, I've kind of covered enough ground on the solution. In fact, I'm going to come back to that in a minute. Just to look at a little bit of credibility, this is where we're sitting at the moment. We have a quite strong penetration in Central Africa, and obviously South Africa is a big dark blue blob, but we have got quite a number of clients in that Central Africa space, a few dotted in India, the United Kingdom, and that. I think you can see the reason I put this up is that this is a tried and tested platform, and I think it's really important that to present this picture from the perspective that this is not something which is small or Mickey Mouse. There's a lot of infrastructure behind that, and the solution is incredibly scalable. And to point to that, these are some of the companies that we work with. And I'd like to just go through a couple of different examples. So from an operational management perspective, we've got a number of companies dealing with end-to-end operations. A good example of that is a company called IFS, which we work with very closely. They look after the catering facilities and cleaning and facilities management for large mines. And we assist them with the entire operation of the business, from health and safety, operational management, human resources, finance department, managing just simple things like debtors collection, and it goes right across the business. They must have about 100 odd different standard operating procedures that are implemented in the business. We also work in the quality control space. We're proud to be working with Mr. Price, and where they manage quality from all the different suppliers across the marketplace. We have health and safety across a number of different businesses. So this is a big play for many businesses. There are a lot of specific health and safety solutions that work in the marketplace. What I think the real benefit to companies in deploying something like Opus is that you have health and safety, but then you have all of the other systems that you can incorporate into one. So finance talks to health and safety, talks to operations, supply chain, etc. Remote jobs and costing, so the ability to do remote installation work and to manage that flow of work, to ensure that the information is gathered, to be able to then cost it. So what stock's being used, what people are being used, what equipment's being used, and cost it directly into your accounting system. Time and attendance is becoming a massive thing. So at the moment, a lot of companies are grappling with what do they do with biometric readers, because that's obviously one way to spread COVID-19. And what we've done is we built a time and attendance mechanism in the app, which enables staff to enter through facial recognition, and it bypasses having to touch any other device other than their own device, which is a wonderful, or the security could be deploying it as well. We have a lot of security staff that'll deploy and provide access. So that can also be used for visitors' entries and things like that. Audits, checklists, and scorecards being used across the board. So in the property space and in the especially hotel group, we have a lot of companies using audits, checklists, retailers using that extensively, and that really talks to standard operating procedures. And then the distribution of warranties, or the management of warranties, which talks also to stock and asset management. So it's just to give you some examples. We also have fault reporting, which is a big play where you want to be able to record a fault and then deal with it. Often it goes into a book or it goes into a message and it's lost. So that covers very much the high level, I think, what we're doing and the problems we're solving. So I just wanted to quickly go through the application, because I do realize we're a little bit out of time. So we've developed this COVID pack, which has been offered as a special pack for everyone who's attended the conference. I'll talk to some of the numbers in a few seconds or a few minutes. Just to give you a sense, I'm working on a mobile platform at the moment, so I've actually paired to my tablet or my phone. And if I wanted to do, for example, go through a employee declaration or report an issue or have a visitor's declaration, I've got a list of all the different forms that are, or procedures that I have that are applicable to me. So if I, for example, wanted to reopen my operation, I want to go to the office, start that, and I'd like to have a look at what are the requirements. You can see we've just set this form up as a very simple process, which just gives you an idea of all the things that need to be covered. Now, what is really useful here, and I'm going to go to one of the existing ones that I've already captured, because that's got info in it rather than capturing the data in front of you. So this is with data collected. You can see that distance signage is on. I've taken a photo, distance requirements are met, limited customers are met. And we've prepared this pack for anyone who wants to kick off or reopen their business. And we've got different packs for retailers, restaurants, for construction companies and the likes. Now, all this information, if I'm gathering that and I'm going through that, I might be going through my business and just assessing whether it's actually I'm good to go. All the work that I'm doing is captured on this mobile platform, so I can see this data at any point in time. So if I go to the reopening guidance checklist, I can see that data's come through, and I could push it out into a nice report format immediately. So if I had an inspector coming in to have a look at why or what plan did I have to open up, I could quickly access it and get a view and present that in terms of what that looks like. So here I'm just going to pop it up on another tab, and that comes in. So there, the information that I gathered has come in. Now I've got a nice report which has been prepared, and I haven't had to do more than capture the information on mobile, and it's gone straight into the cloud, and I've got a report that I can produce immediately off it. So to look at some other examples, some more relevant examples here, I'm going to just minimize that. To go back to my example, this is an example of just handing out personal protection equipment. So I'd want to know the employee, staff number. Have I got a face mask? If I do, how many were supplied? What date did I supply it on? Was training provided? Yes or no? Gloves. So if I say no, an alert is going to go back to the management staff to say, hang on, this particular person, although we supply PPE equipment, wasn't trained. And that would be an immediate workflow and email going through to a particular, to the relevant person. We enter quantities, go through different face shield, etc. Now, all of what I'm showing you here is completely customizable. So this is where we talk to the self-service portal. This is an example that we've just set up. It doesn't have to be this way. We've also introduced a new method of being able to sign, which is through a one-time PIN. So, for example, if I want to sign off a document with a customer, I don't want to share my device while I'm installing. I might be installing an air conditioner. I don't want to go in and ask the customer to go through the sign-off document on the tablet. So what we did is we introduced a PIN code. So you type in the customer's number. That customer number might have already been in there, which is great. If it is, it would have appeared. I'd send the one-time PIN, and I'd verify that PIN, and then that is accepted as a sign-off between the two parties. The supervisor, we've left as a normal wet signature. So there I can just go and type on my tablet, but now this is for the supervisor because they're actually performing this particular function. They're doing this. So it's fine for them to be able to sign off. So this is the kind of technology that we've put in play to try and be as safe as possible. And we've done this very quickly while we've been in lockdown to respond to being able to not share devices, because that was a problem we were trying to solve in this space. So I think this has given you a little bit of an overview of just kind of the technology and what it's about. There's so much to this application. I don't want to go through every single part of it. I think the examples I've given it probably give you a good sense of what can be done. In this particular pack that we've provided, we've got things on the COVID training and induction. We've got a cleaning and disinfectant checklist. We've got the reopening guidance, which we went through. We've got an employee declaration with temperatures. We've got PPE register, reporting an issue, and a visitor's declaration. And I can gather these things and I can search and navigate through this at any point in time. And if I had more time, I'd be able to go through some of the analytics and be able to really show you some of these, the amazing capability from a business intelligence point of view. But I think this has just given you a little bit of a feel for what the technology can do and how quickly it can be deployed into your environment or into a business environment, and the kind of things that we've been doing to really facilitate and assist businesses at being agile and be responsive to the challenges that we're all facing. So yeah, thank you very, very much for your time. It's been great spending this time with you, and hoping that we chat more. I'm going to hand back to either Grant or Rajesh.
Well, thank you so much. Much appreciate the run through on the app. Just a quick question. Do you think it's going to be legislated that we're going to have this sort of application or information readily available in terms of if an inspector comes in, you mentioned earlier, if an inspector comes in to check. Sorry, Phil, you're on mute.
Yeah, sorry. Cool, sorry, Rajesh. So yeah, I'm not sure from a regulatory perspective whether it's going to be regulated or not. What I am sure of is that I'd want to have that information if an inspector were to come to my business and say, show me what your plan looks like. Let me see what you've done. What have you prepared? How have you prepared yourself? And show me, if I can present a piece of technology and I can show them exactly the process that I've gone through, I can navigate through that quickly. They're not going to carry on going through. And we you know, the business with a fine tooth comb. And we've seen a lot of businesses that we've been working with, some of them retrospectively because they've had visits or they've had someone come through and then said, well, we need to actually adjust. We need this. Or their customers have demanded it and said, what's the plan look like? So I think a lot of corporates are going to start demanding that as well. So I guess our view is that it is something you have to have. It's whether it's regulated or not. I think it's really just good practice.
Yeah, to protect me, protect you.
Absolutely.
Okay.
Yeah.
Look, we have run out of time. There's a whole bunch of questions that I could ask as well. So much appreciated. Thank you so much for presenting. Peter, thank you so much for your insights as well. And to the attendees, I hope you found it insightful and helpful. Give us a call. We'll send through the presentation and any questions that you may have. We'll try and answer that online via email. We do, as Phil mentioned, we do have the app available for every attendee on a limited basis. So if there's anyone that would require it or sees a need for it, this is a platform. It can go a lot more than just COVID and contact tracing and things like that. It will manage pretty much everything that needs information inputted. So I would love to chat to you afterwards, but thank you so much.